Good afternoon, everybody, and welcome to today's Open to Export webinar on experiences faced by SME exporters at the moment in relation to funding and foreign exchange. My name is William Barnes-Graham, and I am the Senior Content Editor at the Institute of Export and International Trade. And just a quick note to say that we are all dialing in from home as per social distancing advice. So if there is any lag at any point due to home Wi-Fi's, please do bear with us. Next, please. Great. Okay, so I'm going to do the first poll of the day. So I'll just give everyone a couple of minutes just to answer this question. It's about what has the main impact of COVID-19 been on your business so far. Pick the one of these options which applies most. We've got delays at customs, cash flow issues, staff off sick, decline in demand for your services, or a rise in price of freight transport. Great, so I'm going to share the results of that poll now. So interestingly, there's a mirror to the poll we did similarly in a webinar I did a couple of weeks ago, which said that decline in demand for services was a big drop. But also interestingly for today, there's been a big rise in people saying cash flow issues are the main impact they've experienced so far. So I'm sure we'll hear a bit more about that in a second in terms of what businesses can do about cash flow issues during the COVID-19 outbreak. So I'm just going to hide that poll. And at this point, it's my pleasure to welcome our three fantastic speakers from Bibby today, and Bibby Financial Services and Bibby FX. Later on, we'll be hearing from Andrew Paris about the FX markets and what exporters can do to mitigate currency fluctuations during times such as this COVID pandemic. Paul Fraser will be covering kind of trade finance for SMEs during this period. And to begin with, it's my delight to welcome back a regular webinar speaker in Yvonne Weddell-Anderson, who will be talking about export finance solutions and introducing some of Bibby's support for SMEs at the moment. So Yvonne, over to you.
Thanks very much, Will. I'll just quickly run through the agenda. I'll give you an introduction to Bibby Financial Services for those that don't know us. I'll then talk about what's happening in our export market at the moment and what we're able to offer to our clients. I'll then hand over to Paul Fraser, our UK Sales Director in Specialist Finance, and he's going to talk about import finance or trade finance. And then finally, as Will mentioned, handing over to Will Paris, who's going to talk about our FX capabilities. If I could have the next slide, please. That's great. So I think it's always good to start with who we are. So a quick slide here for those of you who until now have not been aware of Bibby Financial Services. Part of the Bibby Line Group, which was established back in 1807, Bibby Financial Services was an idea in 1980, which spent a couple of years finding its feet and established itself in 1982. We've got offices across Europe and in Southeast Asia, in Hong Kong and Singapore, and a national sales team across all regions of the UK. As well as our export, trade and FX offerings, we are supporting the UK domestic market with a range of invoice finance products. We have a vision to be the independent financial services company that businesses would love to work with. So without any more delay, let's have a look at exactly what we do. Next slide, please. I'm going to hand over to Paul Fraser. He's just going to talk to you first about funding through the COVID-19 crisis. So over to you, Paul. Thanks.
Thank you, Yvonne. Good afternoon, everyone. I hope everyone is well. Just to, I guess, put things in context, in the UK, we've got 7,700 clients in a multitude of different sectors, typically business to business based, with a turnover ranging from 100,000 turnover to about 220 million. A lot of really good clients, typically trading in the domestic space, but lots and lots of clients exporting overseas. I think it was 129 different countries that our clients sold to at last count, importing from lots of different countries, and those clients rely on FX services as well to support that international trade. I thought I'd share some statistics with you based on how we find things with our clients. And if you think about what we do in the invoice finance space, we're really a collective of all of our clients' turnover, which is, per the previous slide, quite a sum. When we look at that turnover, when I was looking at things, my hypothesis was that given all the COVID issues, that turnover would drop considerably, so 10, 20, 30%. But actually, looking at the figures for March compared to previous periods, immediately on the same period last year, that drop has actually been quite small. It's actually less than 2%. So there are lots of pockets, I guess, where obviously some sectors are seeing quite a reduction in turnover. Obviously, the high street retail space, notably, but on the flip side, internet retail has increased. Construction, despite a lot of construction sites remaining open, there has been a good bit of reduction in terms of construction turnover. But as I said, that overall net figure of reduction of 2%, I think is actually, I know there's sort of companies that aren't in this space, but it's actually quite pleasing to see. Be interesting to see obviously how April pans out. The flip side in terms of turnover, debt turn, again, hypothesis was that customers would be slow paying and be dragging out payment, and certainly we're seeing that for some clients. But actually, again, comparing March to previous periods, it's pretty much on par with what it's been in the past. So it's really good experience that we're having, and some, how we call it, really honourable customers. There are some again pockets where that wouldn't be necessarily the case. High street retailers obviously stretch payments and cancellations effectively of payments completely, and return goods. But pleasingly, again, construction turnover down. In the construction space, the debt turn, the time it takes customers to pay, has actually improved. And in the export space, in the international domain, again, I was thinking that debt term would be extended, but it's actually improved ever so slightly. And certainly that's the experience that our clients have had. So testament to Yvonne and her team of international experts that we've supported our clients to ensure that those are assist those customers to pay our clients, which is really good. While we potentially expect April not to be quite as good, we certainly have a very positive outlook on things, and we don't know when things are going to improve, and we'll get back to some degree of normality. But we certainly expect to see, I guess, a lot of the pent-up demand that's out there, meaning that turnover will increase and potentially rocket, hopefully, fingers crossed, in the near future. Everybody needs clothes, cars, shoes, etc. And certainly from my own perspective, my 2-year-old daughter, she needs the next size of her shoes. So there is that demand that I think will continue. In terms of BFSs, from BFS, Bibby Financial Services perspective, it's really quite pertinent to point out that we're signatories to this SME Finance Charter, which is all about treating our clients fairly and supporting our clients ultimately through thick and thin. Really set out in light of all the Brexit developments. I won't go into too much Brexit related today, but it's really been absolutely key in demonstrating the support that we and a few other signatories, key signatories across the UK, are doing to support our clients. Clients, for us, and as we felt as well, are going through a lot of change, significant change, stating the obvious. We have managed that change for ourselves really well, fantastically, and I've really transitioned to home working, especially, and managing our extensive staff numbers across the UK to support our clients really well. I would say that we have done as much as we can, and potentially even better than ever in the past, been supporting our clients and being that, I guess, constant in all that change that our clients have had to contend with to support them. We're very relationship focused with our clients, and we're by understanding what they do, how they do it, who the individuals are in that business, personally, intimately, we can react and support very well. And obviously those very significantly changing times We have a very positive outlook from a BFS perspective that's transcended across the whole organisation. We have a very keen focus, and as Vaughan said, a 213-year history in international trading. So we've got that dimension and that experience to support our clients in that overseas trade. Probably really importantly with Bibby Financial Services is that we are fantastically funded, which allows us to be really assertive and confident in supporting our clients and the funding that they need. We do support our clients through thick and thin, and certainly at the moment there is, whether you call it thick or thin, at the moment there is that. We can do it quickly, and we can do it with a lot of certainty, which our clients really need, and obviously within reason. Those are our existing clients. We're very, very much open for new business. That's new clients that need funding facilities. We're fantastically well equipped. We've got in excess of 100 frontline, I would call them facility structures to support with understanding those new clients, what they do, how they do it, and what they need from us from a funding perspective and a support perspective. Are those people would be used to face-to-face engagement meetings with our clients. For those new clients, obviously now there's obviously home working. Some will be more accustomed to that home working than others, but that is operating really well. We're using obviously virtual meetings with various mediums, Zoom, Skype, FaceTime, Teams, etc., and working, functioning very well with those prospective new clients. Email obviously to the fore, information sharing and information obtaining good information that we need in order to set those facilities up for our clients is being really well supported by the technology that we've got and we've always had. There has been, I guess, more of a move to e-documents, that is to the fore now, and that's legal documents that used to be paper-based and ink-based signatures. That's all e-document based now, which makes it really safe and quick and easy as well. But subject to getting good information. When I say good information, well presented and informed information for us to be able to make decisions to support good clients. Typically, if we've got that turnaround time of a week to 10 days to get a facility set up for a client is probably the norm. Relevant to point out what we do, the overall sort of collective of what we do is called asset-based lending. That's where we support our clients, not with loans, but with revolving facilities based on their assets, whether that be underlying receivables, debtors, stock, plant and machinery, etc., both retrospectively and ongoing is what we do. The clients that have certainly in the last few weeks and the influx of clients that we've supported have, I guess, fallen in a few different categories. One, clients that haven't necessarily considered any form of ABL, asset-based lending, before. Some that haven't known that ABL existed before and should become aware and take advantage of asset-based lending. And also others where they've maybe had asset-based lending with a previous provider where they want some enhancement, improvement, and I guess more commercial appetite to support their businesses moving forward. And that, in a lot of cases, revolves around the export finance element and import finance to a degree, where maybe there was a reticence of the previous funder, even in good times, in those halcyon days, to support export sales overseas. And that's, as I said, where we really, really excel. Two types of need, I guess, follow that. One is where we have clients that are wanting to generate cash now to support, obviously, immediate cash flow requirements, and also clients that want that additional headroom to, and obviously some good BCC stats about what cash flow companies have to support them through the next potential few weeks and few months, but want that headroom to support as that additional tool to manage through this period. And then two, and there are quite a lot of businesses that can manage from a cash flow perspective, but are anticipating when there is that return to normal or some degree of normal to really take advantage of that return to normal, that pent up demand and opportunities that will create. there are lots of other lending opportunities out there. There are 200 plus lenders in the SME space, I guess, within the UK. Obviously, we're on the commercial side of things. Obviously, others do things in their own inimitable way. There's really good brokers out there, and obviously through banks, the CBILS scheme is available with other government options, obviously including within CBILS through British Business Bank. There's the job retention scheme and VAT deferments as well, which I think cover from the 20th of March to the 30th of June of deferment, effectively quasi-cash funding to a degree. But obviously, a lot of people will be really cognizant of what those are in any case. But lots of cash protection. Protecting measures there, and different things to consider. But brief overview. Back to you, I think, Yvonne.
Yeah, thanks for that, Paul. Can we have the next slide? Invoice finance isn't a traditional loan, so let's have a good look at this diagram so you can see how the process works. You have a sale, ship the goods or provide the service, raise an invoice, send it to the financier. Typically, BFS will advance up to 85% of the value of the invoice. The debt matures, either we or you chase the customer for payment. The customer pays the invoice financier if the facility is on a disclosed basis, or pays into a trust account if an undisclosed facility, at which point the client receives the remaining value of the invoice. So if you're a UK business new to exporting or have an existing international customer base, BFS are open for business. In 2019, we funded £364 million of exports. If you're concerned about getting paid, already experiencing difficulties reaching customers, who, like many UK businesses, will now be working from home and most often extending payment terms, talk to us about what support we can offer you. If you're using trade credit insurance to protect against non-payment and political risk, you're already having some degree of comfort against absorbing bad debts that, when they happen, and in this current environment, they will happen, come straight off the bottom line if you don't have such a policy. BFS have their own bad debt protection product. In 2019, we provided our clients with £99 million of bad debt protection cover. Using our 20 years of knowledge and experience in funding exporters, we are providing our clients with dedicated support at every stage of the international sales process right now. And what about just right now? What is happening? Our business as usual attitude in these unprecedented times means we continue to fund as many markets around the globe as we possibly can. Is this a moving feast for the time being? Yes, it is. But rather than view your export opportunities as a dilemma, talk to us, let us partner with you and support you on the journey. Many of our clients are feeling squeezed right now. We can support them with additional increases in funding that can help pay suppliers and staff wages as their customers extend those payment terms. Our manpower service clients, especially those with technical skills, remain busy. The oil and gas industry, the wind turbine industry haven't turned off, and they still need the expertise the UK has to offer. Some of our clients in the field of specialist engineering are now turning their hands to building respirators. Other clients are manufacturing hand sanitizer gel, importing PPE equipment, or putting together COVID-19 testing kits, all for the home and export market. We've got one such client that came to BFS in November 2019, traditionally produces diagnostic kits for infectious diseases such as Ebola and malaria. Now also producing COVID-19 testing kits as quickly as the supply of the component parts can be obtained. And what if global retailers of all trades with online sales ability they're seeing a surge in demand. The issue here is the supply and movement of stock and relying on overseas suppliers, particularly in Southeast Asia, where suddenly the UK is seeing a surge in demand for letter of credit payments. This is something that Paul is going to talk to you about later on under our trade finance capability. Next slide, please. This slide isn't a finite list, but it does demonstrate the kind of information we're interested in. I won't talk through all of them, but if I just pick a few to think about. Terms and conditions. Are they fit for export purpose? Do they include Incoterms, terms of payment, details of dispute resolution, legal jurisdiction? Many businesses that come to us without any terms and conditions. You need to have them, you really do. The Institute of Export offer a membership which includes supporting and providing a set of its terms and conditions which are right for your industry sector. So do look this up on their website because it's a really good deal. On contracts, if you're obliged to work to the terms of the buyer, check for onerous conditions and where the legal jurisdiction is. If you have a legal dispute, think about the costs that you might incur in attending legal proceedings overseas under the local laws and culture that will be different to that in the UK. We're not saying don't do it, but please do have it on your radar. We like to see a copy of your accounts. Are you loss-making? We have loss-making clients. We do like you to be able to demonstrate a turnaround position at some point in the future through sales and cash forecasts, but don't be dissuaded, please, because of this. A business plan, important for new starts, for their strategic planning, as well as for the financier. This will include your route to market, the countries you're targeting in that first year of sales, as well as your financial forecasts. That concludes me. But before Paul comes in, we're going to run a quick straw poll again. Have you been able to successfully access any of the governance financial support packages? Please select one of the following. Yes, no, but I've tried, not yet tried, or not needed to. And here are the results. Have you been able to successfully access any of the government's financial support packages? 10% offer a yes. No, but I've tried, 24%. Not yet tried, 39%. And not needed to, 28%. The not that no, but I've tried at 24% is interesting because we're speaking to clients every day who are speaking to their banks about these loans, and many of them, particularly in the lower end of the SME sector, are having difficulty in gaining access to these loans. So I think that's a quite interesting result. Paul, I'm now going to hand over to you.
Just as an overview, again, put things into context and share a bit of intel and our stats. Like quoting the stats particularly, they have seen a decrease in trade transactions, which I'll come on to in terms of what that means. But I guess maybe just put into perspective, you'll probably all see a lot of news about garments being produced. A lot of garments are produced in China, India, Bangladesh, and Far East. We support a lot of our clients who supply into the high street as well as other sectors. But obviously, as we all know, what's happened with the high streets and the closures, effectively the forced closures, there's been a knock-on effect on trade, as has been the case across the world. So those trade transactions have been cancelled to a large degree. And if you think about it, just prior to our issues, China had their own issues and closed. So that supply side was impacted. But again, that just maybe gives you a bit of context, which I'll go into and talk about a little later. If I guess just further context, how are we involved in international trade from a purchasing perspective? I think the reference is trade finance or import finance. Another term often used is purchase finance. We support our clients with. We support our clients with purchasing to bring to the UK as an import, but also they can be having goods made overseas to then sell overseas as well, and not necessarily bring into the UK. And again, typically our clients would be buying from the Far East, especially China. In terms of what we do, and again, there's an illustration on the slide there of what we do for a client in one unique example, but BFS provide different payment options or trade finance options to our clients, and in no particular order. We support our clients with paying deposits to suppliers overseas, and that can be deposits paid typically up to 60 days in advance of the anticipated supply and shipment of the goods being acquired. It can be 100% of the cost of the goods that is paid up to 5 business days in advance of the loading of the goods onto the ship, or however they're being transported. It can be in the form of letters of credit, which is everybody will probably be well aware if IOE well versed. A letter of credit is a guarantee through the banking system that if the supplier does what's been asked of him, i.e. make the goods to the description defined, at a place defined and at a time that's defined, and providing the documents to back it up, they will be guaranteed to be paid. So pretty secure. We also provide a guarantee option, which is more used within the UK and Europe for UK and European suppliers to our UK clients, where that is a BFS guarantee, where our credit rating, our credit status is relied upon to guarantee payment to suppliers. And then obviously, often when the goods are shipped by sea, we work on a payment against documents basis. We would provide those options of payment where we're covering the full cost of the goods if needed by our client. Included within that can be the import, if needed, the import VAT, duty costs, and freight costs as well. So we think about it, the whole cost of that acquisition of the goods can be funded, meaning cash is available that our client would otherwise have potentially need to fund that working capital to be used elsewhere. That trade finance is typically repaid when the stock is onward sold, or potentially 90 to 120 days and sometimes beyond. Why is this needed, or why is it used typically or traditionally by our clients? There could be credit limit restrictions in from sellers, from the Chinese suppliers, that are restricting how much our client can buy with their own cash resources. It can be a very seasonal business, an autumn winter season or spring summer season, for example, in the garment space, where there are big peaks in cash requirement. It can be where our clients have used it to negotiate discounts for early payment to the supplier in return for a discount. It can just be the terms that the suppliers operate in. What we're seeing and what we anticipate seeing an awful lot more is where they will need more cash deposits and letters of credits than ever before. And this is largely on the basis that those Far Eastern suppliers have had, and again, it's well documented in the news and everywhere else, is that those suppliers have had cancelled orders and knock-on effect of cancelled orders from UK High Street and across the world, which means that the Far East suppliers have spent money on labour, on materials, in producing those goods, and are left holding those goods with no deposit, no confirmation that they will actually get paid. So we anticipate a fair bit of change there. Some of the Chinese suppliers have obviously had to shut down themselves for a period and potentially restrict or reduce their cash in their business, which means that they may potentially need to rely on more support from the buyer. And additionally to that, obviously, with the impact from a widespread economy perspective on businesses, Chinese, Far Eastern suppliers may not be as confident in the credit status of UK buyers than they once were. So cognizant of all that, we do really anticipate that suppliers will want cash up front, will want deposits, and potentially will want letters of credit, certainly of all options. While there is some protection that we would offer, that if cash or deposits are paid to suppliers, that if the supplier themselves were to fail and not supply goods and disappear with the cash or deposit, a letter of credit is probably the option that we'd most recommend for our UK clients for that protection. And when is it applicable? Which businesses would fit well with import finance? Not everyone is going to fit with how we operate. Trade finance for our clients is great for an awful lot of businesses, but typically it needs to be where we're supporting our clients to purchase finished goods. So when I say finished goods, I mean that's buying goods which are bought and acquired in the same state that they will be onward sold to their end customers. So it can be the purchase of toys or clothes, soft commodities, frozen fish. Obviously, very newsworthy now, and lots of existing clients and new clients we're setting up facilities for where they're buying medical equipment, PPE, etc., hand sanitizer, hand gel, finished goods. I guess two different options. One, and the most common, is where those goods that are being purchased are pre-sold. So there'll be orders that our clients are bringing in to satisfy to their customers. But if they're not pre-sold, there aren't defined customers that have placed those orders, we would expect to see that the business is a bit more established, has got some trading history, and certainly got some selling history of selling those particular products. Within our trade space, lots of different themes at the moment, and I guess probably highlighting the good sectors. We're seeing some good stuff, and this is probably slightly rhetorical, stating the obvious, but in the food space, food sector, medical equipment, as said, or PPE space has grown massively in the last few weeks. DIY related products, gaming products, as said, soft commodities. So lots of good things going on there, and lots of opportunities. Again, with PPE space, it fits really well where you've got the NHS placing orders, supermarkets placing orders, security firms placing orders, and our clients on the strength of that are then sourcing goods. Some not so good sectors where they're really challenged at the moment. Obviously, I've talked about high street retail. However, flip side, obviously online retail is doing quite well. Travel, automotive, aviation. But again, like the high street, we think there's going to be a real pent-up demand there that will come good, and trade finance will fit particularly well. Additional thing to finish off, modes of transport. We have seen some challenges, but probably not to the extent that we would have envisaged, but some delays. Particularly, we've seen it with a few clients where they're expecting shipment, the goods are loaded, but the ship isn't departing until it's fully loaded. And obviously, from the shipper's perspective, it makes more sense to have a full ship sailing rather than partial. So there is a delay in shipment. There is more work and more effort from our clients' perspective to get that logistics operation set up. So it's taking a little bit longer, and that is being taken on board by our clients. In terms of, if you go to the next slide, there's a checklist as well, and this is pretty standard checklist of what we would expect to see when we're setting up a facility for a client. All pretty obvious. There are a few things that are addition to this and probably more relevant that I'll reference. Within trade finance especially, is an understanding of the supply chain process map, effectively, of that supply chain piece, so we can understand where we fit in that and the value that we can drive for our client, and additional cash that we can generate. Supplier details, it's referenced in that list there, but key is to understand the supplier, the state the supplier will be in, and the requirement that a supplier has, especially if they want a deposit or cash payment before they dispatch any goods. we'd be needing to, as with our client, to check out the credit status of that supplier and potentially get some protection on potential failure of that supplier if there's cash that's being sent overseas that may not merit some goods at the other end. Some more headroom in delivery time slots as well, I think, is probably pretty pertinent given some of the challenges, especially maybe as demand picks up, late deliveries and potential issues with customer terms and conditions at the other end need to be put into the equation. And probably to that then is the terms and conditions with customers. It's really important to understand what those terms and conditions look like, especially regarding potential cancellation clauses. If there is an express cancellation clause, which is often a cancellation option any time up to the point of delivery, need to really consider that given the circumstances. But if things are looking positive, that may not become too much of an issue. But especially obviously more relevant with the more bespoke goods that are being supplied to those customers, obviously, and the ability to resell them on is more challenging. And review key and sort of very newsworthy at the moment is force majeure clauses. Obviously, what this means to the ability for, or the right and ability for customers to cancel orders in these circumstances or even return goods. I would say, and our clients are doing this, is checking and double checking customer orders that our clients have, to make sure that those customers are really intent on receiving those goods after our client does all and everything that they need to do to source those goods, not least the cash that they need to find to pay for those goods, checking the credit status and whether there's any bad debt protection on that customer is also going to be really, really important. And last but not least, certainly for us and any other funder, most businesses do it, is just understand what their cash requirements are moving forwards. And it's really good to see a lot of businesses that are looking at different iterations. It's really difficult for anybody. Nobody can say when things are going to come good and return to any form of normality, hopefully soon. But just some different iterations of sensitivity analysis and the cash flow forecasts is pretty good. We, with our clients and with prospective new clients, do talk through all of these things. So not only do we leave your own devices to do these, we talk through them, but really important that obviously anybody with an IOE background, that you involve yourselves with the IOE and get really cognizant of how they support and can input. But having really good partners is absolutely key. IOE is one, BCC is another, and the accountants and FDs within businesses of that size that have FDs have been absolutely instrumental for the businesses and for us in ensuring that we can be as confident as we can to generate the cash to support the businesses that they need. I think over to you, Andrew, if that's okay.
I think we may be on a poll if you can hear me. Paul, can you hear me?
You're back. I will.
Am I back? Good. Sorry about the issues earlier, everyone. So the next poll is how much cash does your business have in reserve? Just going to launch that now. So the options are 12 months and more, 6 to 12 months, 3 to 6 months, under 3 months, or none, but we are applying for a government-backed loan. Just again, a quick note to say apologies about connection issues today. So, obviously, all doing it from home. It's first time we've had issues for a while as well. So, yeah, apologies for that. But well done, Yvonne, for some fantastic covering earlier. That's very much appreciated. And yeah, apologies as well for the slide lag as well. We're on our backup connection for the slides, so that's why that's been a bit slower today. We will be circulating a recording of the webinar afterwards though, and you can ask for the slides as well by emailing admin@opentoexport.com. I'll just leave it a bit longer for people to have a chance to vote, and close it in 3, 2, 1. And those are the results. So 43% of people have 3 to 6 months of cash in reserves. So probably looking okay for the lockdown period, as long as it doesn't go too much longer than that. A fair few people 12 months, but 22% under 3 or 14% with no cash in reserve. So it's, yeah, obviously it's a range of business situations there, and hopefully people can get the support they need. But I'm going to hand it back to Andrew now to talk through FX.
Good afternoon, everyone. Just waiting for the slide to come up. Bibby Foreign Exchange offers client foreign exchange services to Bibby Financial Services clients, as well as direct to clients who are not with Bibby Financial Services. I'm going back to clients who are with Bibby Financial Services. A seamless integration for Bibby clients, and we can pull funds from your funding availability within Bibby Financial Services to pay for trades and pay them away to anywhere you would like to send the funds to. For external clients, if you were to deal with us, you would have to send funds to us via backs or chaps. For the products that we offer spot conversions, which are for immediate payment. You can settle within 2 days. We can also send same-day payments, multiple payments, and urgent transfers. We offer forward contracts, closed and open. A closed forward contract is a contract that you reserve a rate for on the day for a fixed date in the future or a fixed period. It protects you against fluctuations in exchange rates, and it allows you to lock in a rate for a settlement on a predetermined future date. You guaranteed benefit from a guaranteed rate, and you can manage your currency exposure, which could potentially impact cash flow and profitability. Open forward contracts are when you book in a forward contract for, say, 6 months, and you can use the forward contract at any time and draw down the funds. Can you move to the next slide, please? So as you can see from the graph, from December up until March, it was relatively quiet on volatility. And that was due to an agreement coming together over Brexit, and also an election where there was a pretty big majority and gave some certainty to the market. Obviously, then there was a massive drop when the coronavirus started to come over to the UK, and oil prices dropped through the floor, resulting in sterling losing strength. And we went from a rate of close to 132 all the way down to 115 and close to 114. This happened in a very short space of time. And after that, you can see a pretty big recovery all the way back up to the 124 area. And at the moment, we're seeing it reasonably stable. Just to go back to point out some things, there's clients who book in forward contracts if they're with Bibby Financial Services. We don't ask for any deposits, and also we don't make a margin call. So you're protected, and you don't have to pay deposit, and there's no margin call. And what you have seen in the market is when the currency volatility has dropped significantly, using other providers, there's been huge calls on the market and providers asking for big margin calls off of their clients. If you're a client with Bibby Financial Services, we don't ask for that. If you're a client on the external market and you come direct to us, we do ask for margin calls. There's not much for me to talk about further than that, and I'll close myself off from there. Thank you very much.
Thank you, Andrew. And I think before we go into the Q&A, we've got one last poll. So the poll is going to launch now. It is, are you still able to dispatch and receive component parts or goods? Again, I'll leave that on for a few seconds for people to answer. But while you're answering that, thank you to the team at Bibby for the presentations there. Lots of useful advice and information there, I hope. We will be answering your questions very shortly. And please remember, you can ask questions at any point using the question box on the control panel to the right-hand side of your screen. So I'll just give that a bit longer. But it sounds like my connection's back up again. It's one of those days today where everyone's had issues today. It's usually we've got 2 people back up, and we've had issues on a couple of computers. But I think you are almost there with the answers. So just going to show what you've been saying. So most people have been able to send things off or to receive parts of goods. Obviously, there's been a fair few people who've experienced delays, but that's actually not as bad as we could have feared at this stage. But I'm now going to move on to the Q&A. So Ian, if you can move on to the next slide, it will just show people again how you can ask questions. But the first one I will put, I think I'll put to Paul. It's a question from Peter asking, what impact do you anticipate COVID-19 having on export credit insurance rates?
Thanks, Will. Maybe one for Yvonne this as well, but I think certainly just really quickly, we, as Yvonne said, we have provided bad debt protection for a lot of export. We are still doing this, and it's really pleasing that export credit protection is still readily available. And whether that will change with time or not, I don't know. But certainly for the meantime, as I said, it's been really, really pleasing that it is continuing to be readily available. But Vaughan will probably have a bit more insight into the granular aspects of that.
Yeah, I mean, there's no doubt about it. We are seeing limits being pulled more quickly than we otherwise would, and that's across all markets because all markets are affected. One thing I would say that UK Export Finance have recently extended their cover and relaxed some of their rules. So if there is any company listening here this afternoon and they're looking for cover and they can't get that cover from their export trade credit insurer, have a look at the UK Export Finance website and see what they're now doing, because they've extended to OECD and Europe and are making an offering where maybe the trade credit insurers are being a little bit more reluctant. I know there is a call on the trade credit insurance industry to put more money into providing cover, but as we know, going back to 2008, that sometimes there can be a few knee-jerk reactions. We hope that they're not happening. We haven't seen them yet, but at the same time, we have seen an increase in limits being pulled overnight, that's for sure. I think the long-term effect on this will be that when we come to renew our policies, yes, we're probably going to see premiums going up.
Well, just for reference, there has been more demand, but in March, 66% of our clients availed themselves of a bad debt protection facility with ourselves, but that is domestic and export.
Thank you, Paul. Thank you, Yvonne. We had a question in from James asking, what countries or ports have you found are holding all but essential goods from being delivered? And we also had a question just asked by Jonathan, who's asked, he's found shipment delays have hit when based on CIF Incoterms. Is this a broader problem in the market? So I think that's one for you, Yvonne, about firstly, which ports have been found to be holding up goods, and then a question about Incoterms and how they're being affected.
Yeah, well, as best as I can, because obviously we only have the information that our clients provide to us. So I was speaking to one of our clients yesterday. Their difficulty is that they can't get their goods out of China. So what's happening, where before they'd maybe have a couple of pallets or a container on a ship due to leave China, if those ships are not now absolutely full up to the brim, they're not leaving. So the client was saying to me, I've got some orders that he didn't expect to have. He wants to fulfill them, but he can't because he's been told that the ship is probably not going to leave for another 3 or 4 days because it's just not full yet. And that's something that they hadn't experienced previously. I don't have experience on other ports, but speaking to my own team, that wouldn't be the first client that says particularly they're having issues in getting their goods out of China. Another one was goods out of South Korea. So it certainly looks like from our experience that there's a block there in terms of Southeast Asia. Regarding Incoterms, again, nobody in fact has said they're having more trouble with CIS than they are with any other Incoterm. So as much as I'd like to offer some practical advice, I don't actually have any to give based on current experience, I'm afraid, Will. Obviously, CIF is a much preferred Incoterm to FOB because it's providing some insurance if something goes wrong while the goods are at sea or something happens to the ship. But otherwise, I can't really give you maybe the answer you're looking for there.
That might be one we can take offline, and certainly we'll be doing follow-up webinars, so any unanswered questions we'll try to cover to some extent in our future webinars.
Certainly just on that, encourage anyone, irrespective of the Incoterm, to make sure they've got good insurance cover on their shipments.
Thank you, Paul. And there's a couple of questions are coming in about kind of government funding as well. Again, these are probably ones we can't answer on this call, but it might be something we can try and factor into future planning, because we will be running future webinars about COVID and support and offer. So we will try to get to that in the future. One last question, just because we're running low on time now. It's from Gary, who's looking to finance the shipment of commodities from Africa to Europe. What financial assistance is there for this activity? Yvonne, do you want to tackle that one?
Well, if he's looking for funding his goods coming from Africa, then I guess he's looking for some kind of trade finance, which I might just scoot over to Paul and see if he's got an opinion on goods coming out of Africa into Europe.
Yeah, it's common. It's a common transaction within our trade finance space, where we're supporting the purchases of goods from Africa. Obviously, there is an advantage if there is some trading experience with that country or the seller. But very much everything I talked about in the import and trade finance piece is applicable there, and certainly sounds like something that we'd be able to provide facilities for. So certainly happy to discuss offline with that chap.
Great, thank you. So yeah, I think on that note we'll probably start wrapping up. So if we move to the next slide, yeah. Many thanks to Yvonne, Andrew, Paul, once again, some really excellent advice and presentations there. If people do have questions, can we put people through to you afterwards, and is that something we can do?
Yeah, sure.